has promised big action as desperate times call for desperate measures to avoid becoming the next Cyprus in a queue for an international bailout. The former Yugoslav Republic has pledged to sell 15 state firms and raise VAT in a much anticipated package announced by the Prime Minister yesterday. The PM failed, however, to shed any light on the time frame as to when the sell-off will begin. It also said cuts to public sector wage bill, which investors say are needed, would have to wait for the outcome of negotiations with unions. Slovenia was deemed as a trailblazer as the fastest growing economy in the bloc after joining the Eurozone in 2007 and has since shied away from unpopular sales of assets. But with the onset of the global debt crisis, exports began to dry up, leaving Slovenia to feel the pinch. As Finance Minister Uroš Kufer put it, Slovenia is a plane losing altitude and we first have to stabilise that altitude. The Prime Minister said the package, which includes a rise in value-added tax from July 1st to 22% from 20%, would be enough to prevent the tiny Alpine country needing a bailout from the EU and the IMF. She added this programme will enable Slovenia to remain a completely sovereign state. The plan will go to the European Commission today. However, reaction to the announcement has so far been cautious, as investors wait to see if authorities will practice what they preach. One economist from Alta Invest said the plan might buy time, but was not a permanent solution. He added the biggest problem of this programme is that it does not put enough emphasis on cutting costs. The privatisation announcement is a positive surprise, but because of past experience, we're sceptical that Slovenia will indeed sell these firms. Well, the Dukascopy TV team will keep you up to date with the very latest from Slovenia and all the other major financial headlines, but for now, goodbye.